What's going on, everybody? How you doing? Hope all is well. Happy Tuesday. Hope you had a great start to your week yesterday, and let's keep the momentum continuing and progressing. So today's video, I wanted to talk about something that's being talked about a lot in the real estate industry right now is the rising interest rates. And one thing I talked a lot of buyers about, a couple months ago who were, you know, really wearing thin on the seller's market, getting outbid constantly, not wanting to go over ask for homes, thinking they were overpaying for homes, which, by the way, my last video was talking about if buyers were really overpaying for homes. Watch that video. It's very informational, and you're going to see why they weren't actually overpaying for homes if you watch that video. But back to the topic on this video, a lot of buyers decided to put their home search on the shelf, waiting for the market to correct itself and shift back to being a buyer's market. Now I've heard that the offers and the showings have slowed a little bit over the last week or two. Don't know if that's a permanent thing or if it's just a little smidget of hope in a seller's market. Whatever the case may be is. We'll have to find out and see how the weeks trend after this week and see how things go that way. But anyway, a lot of buyers were like, we're just going to wait. We're going to reassess in a couple months and then go back out and try to, get a house if the market corrects itself. The problem with that is one of the reasons, and there was a lot of reasons, but one of the reasons why the market was so crazy and it was a seller's market was because there were so many people looking, then there wasn't enough inventory. And the reason why there were so many people looking was because the record low interest rates at the time. And now interest rates are starting to creep up. So if you put your search on the shelf as a buyer a couple months ago, you're ready to jump back in, you go back and get pre-approved, nothing has changed, your income hasn't changed, your debt hasn't changed, your job hasn't changed, nothing has changed, you're going to be a little disappointed when you find out that you aren't approved for as much, and two, when you get under contract, your estimated monthly payment has gone up as well.
I lost.
So you're going to find out very shortly that the wait wasn't worth it for those two reasons, and two, you shouldn't wait any longer because interest rates aren't going to go back down now. They're starting to go up, and that's where they're trending, and that's where they're going to go. They're going to slowly go up, and every point that you lose on that interest rate, every time it goes up, you're going to lose buying power, and your monthly payment is going to go up, and in turn, how much money you spend over a course of a year or a course of the whole loan, whether it's 15 years or 30 years, is going to go up as well. And of course, you see the writing on the back on my whiteboard behind me, and we're going to break this down mathematically because what do we say all the time? Men lie, women lie, numbers don't lie.
What do you mean by
so
that?
We're going to break this down right now. So with that being said, you see interest rates and buying power up top. So keep in mind, for every 1% interest rate increase, your buying power will decrease 10%. So for every 1%, your buying power will decrease 10%. So for example, I have 3.5%, 4.5%, 5.5% here. Let's say when you first began your search, your home search, you were approved at 3.5%, and you were pre-approved for $300,000 at 3.5%. So let's say you waited, you went back, you got reapproved again, and now your interest rate's 4.5%. But guess what? Now you're probably looking at a pre-approval in the 270 range. So you just lost $30,000 that you can spend on a house. And let me tell you, the type of house you're gonna get from 300,000 to 270, that's a huge drop off. Okay, and then let's just say you waited really long, you got out of the seller's market really early. You were pre-approved at the beginning for 3.5% at 300,000. You go back, now you're at 5.5%, and now your buying power is roughly around 243, 250-ish. So then you're talking about a difference in buying power of about 50,000 if you went from 3.5% to 5.5% on your reapproval. And needless to say, 50,000 is a lot different house. It's a lot different area. Your buying power has decreased substantially, and you're looking at a whole different type of house now based on that. So that's the buying power part of it. Now let's look at your payment and how just a couple points are affecting how much you're going to pay monthly, yearly, and over a course of a 15 to 30 year loan. So again, let's use the 300,000 number since that's what we used up here. And we did 3.5, 3.75, 4%, 4.25, 4.5%. Okay, so we're just talking about intervals of 0.25%, a quarter of a percent. That's the intervals we're using here. So at 300,000, 3.5%, without the taxes and your insurance and all that stuff rolled in. Let's just say you just rolled the loan amount itself. So 300,000, 3.5%. Your payment's going to be about $1,347.13. Okay. So let's say it spiked up to 3.75. Now you're looking at $1,389.35. That's a difference from just that interval of $42.22 a month, from 3.5 to 3.75. Now let's go 3.75 to 4. It's $1,432.25. 4.25, $1,475 and 82 cents, and 4.5, $1,520.06. So as you can see, every 0.25 on 300,000 is adding about $42 to $43 more a month on your payment. Now, like I said, if your interest rate when you got reapproved jumped a full 1%, if it jumped from 3.5 to 4.5, that's a difference in $172.93, almost $173 full dollars difference for waiting that one. So, with $172.93, that's a difference over a year of $2,075 more for waiting, and your rate going from 3.5 to 4.5. You're spending $2,000 more a year in monthly payments. And then, of course, your buying power went down, and you can do the math on a 15-year, 30-year mortgage, a $2,000 difference in 1 year. You can do the math on, like I said, a 15-year or 30-year mortgage. So, a lot of buyers, I understand the reasoning behind that. And again, if you didn't watch my video about are buyers actually overpaying in this market, please go back and watch that. But the most important thing is, one of the favorite quotes is, just because you made a mistake, don't take longer making the same mistake. Sometimes you just got to admit the mistake, correct it, and move on. Don't keep making the same mistake once you've realized you made a mistake. So if you're a buyer and you're still waiting for the market to correct itself, you're hurting yourself. Okay, you're hurting yourself. Your buying power is going down and your monthly payment's going up. And like I said, now that the interest rates have started to trend that way, they're not going the other way. They're not going to reverse field anytime soon now. They're going one way, and that's up, and they're going to stay that way now. So as always, any questions about buying, selling, investing, leasing, whatever the case may be, contact me. And, as I posted a video a couple of weeks ago, now I'm certified as a solar consultant. Any questions on solar, contact me. Till then, have a great day. See you next time.